Symmetric, Muathe.com. Let's take a look at the chart for NVDA. And of course, this is the chart here. What a performer over the last year or so. What an amazing run this is. Whoa. All right, so the last time I talked about this stock was about a month ago, where I was talking about don't underestimate the heart of a champion. Stocks continue to trade above the range, where I was discussing this idea to be careful, not to mess around with a champion. I'll have some video links in the description of this video where I've been talking about this stock over the last year or so. So check them out. Now what I want to discuss today is a little bit different. Now every bull market always seems to have a poster child. In other words, there's always a stock that people will be talking about after the fact. That remember when XYZ was doing this and that during, this bull market phase. For example, one of the poster child stocks for the bull market of, let's call it from about 2003 to about, let's call it late 2007, was Travel Zoo. Now, I don't know how long you've been trading, but this was an absolutely screaming move. The stock jumped up and broke out here, and we're talking about a breakout that took place at about the $10 price range, and the stock would go on to record levels here of about 110 in just a couple of months. Actually, just about 8 months is what it took. That was a big move. One thing you'll notice here, and it's a theme, is it was unable to close above 110. Now that's a round number, which is something I want to discuss here as far as NVDA is concerned. Stock was unable to close above 110 on the monthly, on the weekly, and I think also on the daily. Not sure about the daily, but at least here we can see on the monthly, it failed to close above 120. A huge, 110. 110, I'm getting ahead of myself. So 110, which was this high here, was unable to close above that on the monthly chart. There's another stock that actually people have been trying to play lately. I don't know why, but oh well. And it is DRYS. Now I'm not saying that it's a candidate now. In fact, I wouldn't touch it, and I've had videos. Check my YouTube channel, search for this ticker symbol, you'll see why. I'm not discussing it as an idea right now, but what I'm going back is to this period here. This was a poster child for what was at the time the end of the bull market that took place between 2003 all the way to 2007. This stock was an absolute scream of a stock. Now right now, because of back splits, it's hard to tell the price here, but can you imagine, even if you take this price, talking about 210,000. Wow. And now it's trading at $3, but it's a back split. It never traded at this price, if you get what I mean. It's been back splitting. Anyway, I did manage to take a look at some charts here that I found online, and this is from May 5th, 2008. So you can see the price was here. Stock was tried to close above 140, was unable to do that on a weekly time frame. So again, we see a round number of 140. Round number is the key here. Unable to close above that. Now remember, the stock had a fantastic 2007, moving from about the $10 range and was trading at 140 in a couple of months, about, let's call it, within 11 months or so. So those of us who are trading this time frame, remember that this stock kept on exploding. It would break out, rally, settle down, break out again, and it kept doing this for a period of months. And ultimately, you can see that it did, of course, it reached a high right there. So I think every bull market tends to have a poster child, and the poster child for this generation, in my opinion, is NVDA. But before we go, let's take a look at another chart here for the same dryer ships. And here you can see another nice move here, showing how the stock goes from under $10 to the highs here of 130, 140. Now let's take a look at the current chart for NVDA, which is, in my opinion, the poster child for this current bull market. Right off the bat, just want you to notice something here. As of right now, we've been unable to close above 120 on the monthly. So there is your round number. Unable to close above 120 as of right now. I think that's becoming a red flag. So there's a red flag right there. Let's take a look at the weekly. We can see that on the weekly as of right now, again, we've been unable to close above 120 on the weekly time frame. We seem to be rejected every time we try and move above the 120 price range. So let's take a look at the daily next. And on the daily, we can see that unable to close above 120 at the end of 2016. Right now, we are trying to close above 120. We seem to be rejected. So there is another round number rejection for NVIDIA. Now on the daily, I can see some problems cropping up on the chart. We are making an improvement in day-to-day prices, but take a look at the technicals. The technicals are forming negative divergence. And again, that's another red flag. All right. Also, we are coming back and we are testing the previous break. Now I'll show you what I mean by that. It is this principle here. I call this the uniformity principle. Check the description for what I'm talking about. I go into details about this setup. And so what we have here is there was a recent break of the RSI here. This break, in my opinion, I would suspect that this was a warning break. So this is the warning break. Warns you of the high that is coming. We can see that if we take this break line and draw a line right there, we seem to be getting uniform activity rejection. So in my opinion, this is clearly uniform activity rejection as the stock tried to move above the blue line, the red line, and is now being rejected. So there is another red flag. All right. There is a third red flag. And the third red flag for me is the fact that it is being rejected with uniform activity as it tries to move above 69.1. Again, check the description of the video for a link that explains where I get this number. But we can see here it tried to move above 69.1 but has been rejected with uniform activity. And so on this daily chart, that makes it the third red flag. So given this amazing run that the stock has gone through, given that the market is recording all-time highs, I believe this is a poster child for the stock market. And I also believe that given the red flags, that this is where somebody can take up a position, because I speculate more than likely there's going to be some type of a strong correction, especially if the stock is unable to close above this round number. So given all this, my thinking here is that the next major direction for this instrument is substantially lower. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. E-A-C-S. Woo! Yeah.